sees plenty more upside ahead. Joining us now is Brian Schwartz, Oppenheimer senior analyst. He upgraded Microsoft to outperform today, raised his price target to $600 a share. That's about 20% upside from current levels. And Brian, I guess if it got there, it'd be just shy of $4.5 trillion in market cap. I imagine not everybody in investor world agrees with you that Microsoft is heading there soon.
No, that is fair, John. First of all, thank you very much for having me on your show. There's some concerns about the durability of spending in AI. It has just been so robust so far. And, you know, there's been mixed data points. It seems companies are struggling to keep up in terms of getting the returns from what they're spending on AI technologies. So if we move forward into the future, and there's a perception here that these companies have essentially spent all this money on vaporware, that could slow down adoption and spending of AI. In terms for Microsoft specifically, that could slow down the growth of their Azure business, which underlies the valuation for the company. So that's a big macro concern. Specifically for Microsoft, the OpenAI relationship is top of mind. Microsoft currently has an exclusivity with OpenAI. And, you know, based on our work, we think almost half of the revenue from the AI that's on Azure is coming directly from this OpenAI relationship.
Okay.
So somehow that exclusivity ends.
Right.
You know, that could...
Well, nothing beats perception like reality. So are we going to see across the whole technology spectrum and, frankly, global economy, companies getting the real sort of measurable productivity benefit that would benefit the hyperscalers and Microsoft in particular? Is that what it takes to get you to $600 to start to see that?
I think time will tell, John. Time will tell, you know, to see if the efficacy and can improve in terms of the returns. What's going to get Microsoft, the stock specifically, to our price target is going to be upside potential that we think is going to exist from their earnings and their cash flow as the spending ramps in the near term. We think that the earnings power could be 15% higher than what investors are currently thinking over the next 12 months from Microsoft. That combined with if they can maintain an accelerated growth within the Azure business, that too could drive a higher multiple for Microsoft. We think those two items are not priced into the stock currently.
How much does spending need to ramp? To realize those types of earnings results, how much does it need to ramp from here?
You would need spending to increase at rates close to 20 to 30% to achieve return upsides of 15%.